Good afternoon, this is Clark Neighbors with BIS Commodities in Cedar Rapids with the commodity weekly summary for the last week of August 2014. Title of today's presentation is talking about transition from old crop to new crop, transition from the old marketing year to the new marketing year. But before we do that, let's look at where markets are for the month of August. December corn is down 1 cent for the entire month of August. I'll visit more on that in a second. November beans are down 60 cents. December wheat up 13 cents. Keep in mind, on a couple side notes, the S&P 500 hit over 2,000 points this week for the first time ever. And also quietly, the U.S. dollar index, highest level in a year. That's something to keep in mind as we go through the new marketing year in regards to impact that may or may not have with exports. Also looking back to a year ago, some major changes. For the month of August, the average corn price here in the U.S. on the cash basis was around $3.70. A year ago in August, $6.20. So we're down about $2.50 from a year ago. Soybeans, a year ago, $14.10. August of 2014. This year, $12.20. So down around $1.90 on the soybeans. So once again, corn having more of a break than beans over the last 12 months. Hogs, though, in the livestock sector, seen a nice little increase here. Hogs are about $14 a hundredweight higher now than a year ago, and the cattle about $40 a hundredweight higher than a year ago. As we approach 1st of September, the dynamics of old crop tightness, especially in the soybeans, remains. The September-November bean spread this week, as we go into first notice day today and delivery starting next week, has been 80 cents this week. Incredible volatility on the basis, incredible volatility on the spreads, old crop basis in some sections of the eastern Midwest, crushers I should say, basis of $3.50, $4 and higher over November futures. I believe that's the tightest basis in history that we've seen, and the Western Corn Belt has seen some incredible numbers too. But we have seen some setback on those basis levels since early this week. But right now, again, we're in this transition time frame from tightness in the old crop to a tidal wave of new crop supply coming. That's going to be interesting to watch. A good way to look at it is in soybeans. The U.S. may be going through, if not the tightest, arguably the tightest bean stock scenario going into new crop we've ever seen. To 90 days from now or 120 days from now, the most burdensome supply of soybeans in the world we've ever seen. So that transition, again, that transition is going to be very interesting to watch. Corn, you might see a mini version of that with the recent rains and the crop seeming to maximize its growing season with pretty good weather as a general rule. I wonder if end users have enough corn bought for the month of September. Harvest seems to be pushed back slightly. We're starting to see some real early corn yield results out of a couple areas in Illinois, and as you go in the south, bottom line, without going into much detail, these yields have been nothing short of spectacular in most cases. Bean yields in the Delta have been off the charts good so far. Too early to make generalized statements, but when you hear about 60 to 90 bushel beans in the Delta, obviously there's some good beans out there too. So again, this transition in the corn is going to be interesting to watch. We could see a little bit of tightness again, as we've seen in the last 24 hours in the 70s corn spread. Widened out a fair amount going into first notice day. Now as we approach 1st of September, we'll see what kind of basis levels we see and how much tightness we see. The other interesting point in going forward, and without any way of proving this, with the size of this presumably record crop that we're going to have, the percent of that crop the farmer has sold going into harvest nationwide arguably could be the smallest percentage ever. So that's playing that with storage, with logistics, with what impact that may have on basis as we go along will be interesting to watch also. 2 or 3 things to watch this upcoming week regarding that transition. The Putin play, the Putin premium. Anytime we see some storylines regarding to Russia and Ukraine, it tends to have some positive impact, especially on the wheat. But in saying that, we haven't seen in the last couple days anyway with this type of news much impact on the energies. Weather is becoming less and less of an issue. We're to the point now where unless we have some big rains at harvest and or some cold temperatures to end the growing season prematurely, and that's obviously something everybody's going to watch in September, there's really not much more play in this weather trade. So again, transition from the old crop stocks to the new crop supply. We roll over the calendar next week, and I think there'll be more concentration on new crop, more concentration on yield results. One last note that we have talked about here in the office is very interesting is if you look at the flatness, if you will, of December corn futures during the month of August. As we said, I think we're down a penny for the month. Looking back at other years where you've had record crops, the 2 main record years would be 2004 and 1994. We seem to be doing this every 10 years possibly. The trend or tendency of the market on December futures those years was to start its break in that early mid-May, early June time frame and continue to see pretty good pressure through the summer until you got about to the 1st of August. And then looking at those charts, it seems like the market says, yeah, we know we have a really big crop coming or a potential really big crop coming, but prove it to me. So during the month of August in those 2 years, the corn market or corn futures was fairly choppy, similar to what we've seen this year. Keep in mind in 1994 and 2004 also, from the August supply report with yield estimates to the final yield estimate, in those 2 years the yield went up over 10 bushels an acre from the August report to the final report. Not saying that's going to happen this year, and the key to that is test weight and how much that may or may not build. But keep that in mind. Now, the other thing to watch, if we're following the same pattern as those particular years, the market was choppy in August again, and then usually in early to middle part of September is when the market took its next layer down, if you will. And in both those years, you didn't hit the lows in the market till kind of that December through February time frame before you really bottomed out the corn market. So definitely keep that in mind as we start entering harvest. If yield results continue to be good and we haven't gotten enough done to really get a good feel on it yet, test weights are surprisingly good. We might follow those 2 years that seem to have that kind of transition time frame from August into September. So again, transition's the key, old crop into new crop. If you have any questions, feel free to call us here at the office. Phone number is 800-373-2525 or BIScommodities.com. With that, have a great Labor Day weekend, and we'll see you next week.